If you want to recap all your trading losses, be sure to use this strategy, which is profitable in all charts and time frames. The first tool used in this strategy is called 10-in-1 different moving averages. So add this indicator to the chart. The changes that we should use to optimize this indicator are as follows. You should active MA1, MA2 and MA3 in the Inputs tab, then set MA1 to RMA and change its period to 200. Then also set the MA2 to RMA but change its period to 50. And the last MA, which is the MA3, should also set at RMA and its period should be set at 21. Then in the style section, make the lines a little thicker so they are more visible in the chart. For a buy trade, you need to wait for the price action to cross the 200 moving average from bottom to top and stabilizes above the 200 moving average. The price movement above the 200 moving average means the market momentum is bullish. So in this case, you have to wait for the price action to pull back to one of the moving averages and then enter into a buy trade. In this case, the buy signal will be issued. For a sell trade, you should wait for the price action to cross 200 moving average from top to bottom and stabilize below the 200 moving average. The price movement below the 200 moving average means the market momentum is bearish. So in this case, you have to wait for the price action to pull back to one of the moving averages, and in this case, a sell signal will be issued. But in order to have more accurate trading strategy, I suggest add the RSI historical strategy indicator to the chart. But before that, in order to make profitable trades and recap your past losses, you can use our trading signals on the Telegram channel, the link of which is placed in the description of this video. Now you need to apply special settings on the RSI historical indicator. So in the settings section and in the Inputs tab, change the RSI period to 144 and disable the bar color in the style section. Then change the color 0 to green and make it a little thicker. And after that, change the color 1 to red and also make the color 1 a little thicker. And finally, change the color 2 to white. This indicator is used to confirm or reject issued signals. If the histogram of this indicator is green, buy signals are confirmed. And if the histogram of this indicator is red, the sell signals are confirmed. In this case, an upward crossing has happened and then the price action pulled back to the moving averages. And now we should check the historical RSI indicator. So here the histogram of this indicator is also green, so the buy signal is confirmed. In this example, a downward crossing has occurred and after that the price action pulled back to the moving averages. So this pullback is a sell signal and the histogram of the historical RSI indicator is also red, so the sell signal is confirmed. But if you trade in the following way, you will increase your profit several times. So click the like button and subscribe to the channel so you don't miss the future videos. All the conditions for entering the buy trade are present in this candlestick. So we can enter a buy trade at the close price of this candlestick. You can place the stop loss under the one of the moving averages or under the last swing low. But here's the main profit of this method. We consider the first target as a 1-to-1 risk-reward ratio. And also consider the second target as 1-to-2 risk-reward ratio. Now to enter a trade, we have to divide the trading volume by 2. For example, if you plan to enter into a trade with a volume of 0.2 lots, you need to divide this trading into double trade with a volume of 0.1 lot. Consider the first trade target to the risk-reward ratio of 1:1 and consider the second trade target to the risk-reward ratio of 1:2. Now when the price action reaches the target 1, the first trade will be closed. Now we should move the second target stop loss to the break-even point. So now if the price action continues to move in the direction of your trade, the second target will be touched. And if the price returns, we will exit the second target without any losses. And the opposite is also true for the sell trade. In this trading example, all the conditions are met. So we enter into a sell trade at the close price of this candlestick. So now you can put your stop loss above the last swing of the market. We're going to use the risk-reward ratio of 1:1 for the first target. And we're going to use the risk-reward ratio of 1:2 for the second target. So now, before entering into a trade, remember that you should divide your volume by 2. For example, if you plan to enter a trade with the volume of 2 lots, you should divide this trade into 2 trades with the volume of 1 lot. And set the first trade target to the risk-reward ratio of 1:1. And the target of the second trade should be the risk-reward ratio of 1:2. So when the price reaches the first target, one of the trades will be closed. And then we should move the second trade stop loss to the break-even point. So now if the price continues to move in your direction, the second target will be touched. And if the price action returns, you will exit the trade without any losses. But if you're interested in learning another high win rate scalping strategy, don't miss this video.